welcome to Hot Money and on Bloomberg Mint Live, India's first digital live streaming business news service. And this is a show in which gets you a complete wrap of all the stocks which are buzzing in trade. I am Agam Vakil. Let's welcome in our experts. We have Vinit Bolinjkar of Ventura Securities, Senthil Manikandan of Newberry Capital, and Lancelot Cunha of ValueX, who joins us on the show. Thank you all for joining us here. And today on Hot Money, we will discuss Oberoi Realty, Ashok Leyland, Asian Paints, and Wipro. Let's get cracking then, and let's discuss Oberoi Realty. We are expecting very strong earnings for the company today. Let's find out from our experts if it is the best way to play the realty sector. And I'm going to start off with you, Vinit. I know that you've been positive on Oberoi Realty, but is this the best way to play the sector?
So right now the price has really moved up very fast,
right?
And I think we could be in for a correction. But having said that, I think the market is reading into earlier and faster traction around Thane projects.
Right.
So if that were to be the case, then it would be a different view. But as far as I'm concerned, right now is not the right time to enter this stock.
All right. So positive, but not necessarily the right time to enter the stock. That's the view coming in from Vinit. Lancelot, what about you? How are you viewing this one?
Well, I'm also in a similar pattern looking at this company, because they have been, it's one of the best players to get into if you want to mirror or invest in the real estate sector, because Oberoi Realty has consistently focused on premiumization of its product, built a lot of social infrastructure around their projects, which has actually enabled them to create an extra premium on their properties. And I think that's been sustained for a long time, and looks like that they have now found the winning formula to sustain this even further. So immediate triggers, I think, which the market is looking at is probably their Mulund and new Borivali projects will start hitting revenue recognition now, and that should add to their bottom line as well as top line growth. I think a bit of negative has been that the cash collections have not been as strong as anticipated, and that could put some pressure on working capital. So it does take a while for the real estate cycle to play out.
Right.
So I think given all those things, one should wait for a correction. But if you want to be a long-term investor in real estate, this is a stock you must have in your portfolio.
Okay, and would you agree with these views, Senthil?
Yes, I agree with both of their views, because they are a focused player in the Mumbai market, especially with respect to the premium segment. And with respect to the residential real estate, always the trust and delivery takes the first point. And Oberoi Realty has been, over the last 2 decades, have been very much involved in delivering the projects on time. So they have built up a considerable trust among the Mumbai region. And currently now, with they expanding into Thane, actually now they are venturing a new domain. It's like affordable housing segment. And the land is what they got at a value at around 550 crores is quite reasonable valuation. But now going into a new segment from a premium to affordable, so that we have to watch out for how they are going to plan it out. But on the other hand, I think strong financials, debt to equity around 0.1. So we don't see this kind of strong balance sheet in other real estate players.
Okay.
And with credible management, I think it's one of the best plays in the real estate sector.
All right, so, well, that's the view coming in. All our experts are positive on Oberoi Realty, and there's no doubt about the fact that the stock is trading at, relative premium valuations. But the question then is that what's the way forward now? So, Vinit, coming back to the case you are making, we are still looking at substantial growth coming in terms of expectations as well, and some of these projects will start looking at revenue recognition. You don't think that at some point in time, valuations eventually do take a back seat, and you disregard valuations at least for the time being, and you move in and you say you put in some money in the stock anyway?
So I think right now the valuation is disconcerting for me. Okay. It has gone a bit too fast. The stock has moved very fast, and I think there would be a time correction in the stock. So I'm not seeing the stock do much from these levels. So I'd rather look at different players. One particular stock I like, where the promoter has been buying, is Man Infra.
Right.
They are also a Bombay player, very focused. They have a leg in infra. They're known to be complete projects before time. And they're especially focused on port-based infra. So with the Sagarmala coming in, they would be the preferred beneficiaries. And they're doing projects in micro markets of Goregaon and etc., where they have a very good brand name, and bookings are also very swift.
Right.
So I think that is a very under-recognized stock, and I believe that maybe not in par with Oberoi, but there is another with a similar micro market kind of model which should do well.
Okay. Lancelot, Senthil was making a point with respect to them shifting focus to a certain extent to the economy segment. So far, they've just catered to the premium one. Could this be a matter of concern? Could there be some uncertainties about traction that they can see in this particular area?
Well, I think Oberoi has been a premium market player and will remain a premium market player for bulk of its sales. I think the idea which many of the builders are doing is that there is an opportunity in the affordable market segment in terms of large volume, lower margins, but enhanced, outlay. So all the builders who are in the industry are looking at this as an opportunity to augment their existing sales, because existing sales in the premium segment also are going to be slow, right? They are not taking off as fast as maybe 5 years ago. So I think this is a way to augment their sales and profitability. So it shouldn't be, it's not that they've shifted their focus and now are going to be only a affordable player, affordable homes player. They are actually a premium player. They will get into this segment when the return on investment is attractive, and that will help in their profitability. So I don't think it has a negative. I think it will still be a positive for them.
All right, so there you have it. That's the view coming in on Oberoi Realty. Well, preferable. There certainly is preference, but well, valuations are a sticky point as of now. And with that, we'll move across to the second stock we'd like to discuss, and that's Ashok Leyland. We've started seeing a resurgence in commercial vehicles volumes, and it's not just the case for Ashok Leyland. We've seen that in case of Tata Motors as well. That said, the real question is, will these volumes be enough to take the company to new highs? And to a certain extent, I also want to address what we can expect with respect to commercial volume vehicles going into the next couple of quarters. Guys, we have a minute for initial comments, and after that, we can carry this discussion out. So, Senthil, I'm going to start off with you. You think that Ashok Leyland can build on his volumes based on your reading of the economy?
Yes, I think so. Because there are only two plays in the commercial vehicle sector. One can be the Tata Motors, another can be the Ashok Leyland. But if you're going to bet on Tata Motors, it's a major play on JLR. So if you want to pick a pure play, commercial vehicle play in India, then it's going to be Ashok Leyland. And we are seeing the growth that is coming from the MHCV space and the LCV space. And with respect to Ashok Leyland, with their new model launches in FY19, and also the network expansion they have done in the last 3 years. Like in the MHCV side, they have done a network expansion almost 5x. So this network expansion plus new models is going to bring industry beating growth for the company in the next coming years. So we remain quite positive on the stock.
All right, positive on Ashok Leyland. That's what Senthil is saying. Lancelot, what about you? What's your view here?
Well, I'm positive as well, because I think apart from the commercial vehicles business in India, Ashok Leyland over the last 3 years has been focused developing its markets in Africa and in other parts of Asia. And that I see has been giving good amount of traction. And their experience in becoming a major player in the developing markets like India, where road conditions are very different, spare parts and servicing is very different, I think will give them an advantage in Africa. So I see that becoming a major trigger for them. So while if you look at the exports and that keeps growing, I think that they will become one of the top 3 companies in each of the countries that they operate in. So it's a big positive. And the defense is the other thing that's not really captured in as yet. It's just beginning to play out. As the allocation from defense increases, I think you will see greater traction. So yes, Ashok Leyland can build on this growth story.
All right, and I take, Vinit, your philosophy on Ashok Leyland is in line with the other experts.
Yeah, actually I'm extremely bullish, given the fact that the 4 quarter numbers that we have seen, that is due to supply constraints on the vendor side. With those being eased out, I think the growth will come very fast. That is one. Second is, there are a number of triggers which are there. The scrappage policy, the loading limits in states like UP, Jharkhand, MP, etc., Rajasthan. And, the company has gained market share across product segments. the product mix is changing towards the higher end. You know, the 26 tonners and above are seeing gains in terms of percentage share of the overall CV business.
Right.
So those are high volume products, and Ashok Leyland has managed to do well in these segments. Apart from that, there is a lot of thinking in the company to reduce cyclicality of the CV space. So they are growing the spare parts business, defense is started to kick off, and you have the aftermarket business also come in.
Right.
So at around 9 rupees earnings for FY20, the stock is I think very reasonably valued.
Okay.
And because of its that movement away from the cyclicality space, it will always get a premium to the other players.
All right, Vinit, my question then is that the monetary policy now is, well, at least the committee is indicating some sort of consolidation in interest rates. And there could be a possibility that we could actually see an interest rate hike in this particular year itself. You think that could be a matter of concern with respect to sales, especially when a majority of these sales are financed?
See, I don't think that the government will follow a policy of high interest rates until it is really compulsive. Yes, there are a few factors that global rates are inching up. We could see a 25 bips increase. And if you take it beyond the demo year, it will still be like to like or maybe under that. So I don't think that it's a very hawkish kind of policy. The busy season will kick in. Yes, there is tightness and we need to keep our monetary inflation in check. So there would be some kind of increase. So 25 bips increase is already factored in.
Right.
And I don't think that is going to scuttle demand.
Okay. Senthil, my question on competition again is that I know that Ashok Leyland is very well placed with respect to its markets, its branding, but how would you say it's placed in comparison to the other competitors in the areas that it is focused in right now?
So that way I could look at the new product launches. FY19, if you look at the two topmost projects, one is they are launching a tipper, which is going to be their largest tonnage ever produced by the company.
Right.
So these kind of heavy tonnage vehicles which the company is coming up with, and we are also seeing the market moving towards heavy tonnage because with GST coming in, there is a consolidation in the warehouse industry.
Right.
So the market is moving towards heavy tonnage. So Ashok Leyland with his brand strength and network which they have built in the last 2 to 3 years, and with new products in the heavier tonnage area, I think they could maintain or increase the market share going forward.
Right.
And second point could be their balance sheet strength. Actually, they are generating a free cash flow of around 1,500 to 1,600 crores. And so with this strong free cash flow generation, it could further give more leeway for the management to bring up the more R&D spend and new products.
All right.
So they are well placed.
Okay. Lancelot, between Tata Motors and Ashok Leyland, would you prefer going on the concentrated bet of Ashok Leyland, or would you say, Tata Motors has a wider play, it also has its hands and legs in other areas? What would be between the two of you?
I think, if you're looking at a CV play, then Ashok Leyland is the stock to be with.
Okay.
If you're looking at pure valuation perspective, Tata Motors has fallen quite a bit from its peak.
Sure.
So maybe valuations might become attractive to start adding into Tata Motors as well. So from a valuation play, you can have a bit of Tata Motors in your portfolio if you're looking at it from a choice. But if you want to be in the CV space, I think Ashok Leyland has to be in the portfolio.
Okay, there you have it, guys. That's the view on Ashok Leyland. All experts are very constructive on this particular company, especially on the back of commercial vehicle volumes. But moving on to the third stock on our list is Asian Paints. Let's find out from our experts if the stock can give real nifty beating returns over the next 1 year. Over the last 1 year, it really hasn't outperformed the Nifty, but that said, it's had a stellar record over the past 10 years, 15 years, 20 years. So 1 year is, maybe a blip in comparison to what Asian Paints has done over the previous few years. That said, let's not forget that there is a little bit of an uptick in crude oil prices. That was a big advantage that was playing out for a lot of other companies that had exposure to crude-linked input costs. So, Lancelot, I'm going to start with you. You think it can beat the Nifty returns over the next coming year?
Well, it's difficult to predict where the Nifty will be in the next 1 year. But I would say that if you're looking at Asian Paints investing, you shouldn't be looking at it for a 1 year perspective, because this is a company that is strategically built a base in the home improvements business, which will play out over the next 2-3 years, has built a very strong brand as well as presence in the decorative paint segment. So they're coming out with a lot of innovations in that segment. So with the growth that you see and the lifestyle changes that we are seeing, that more and more people want to do improvements, I think one has to look at this investment over a 2-3 year period minimum. And if you look at the returns may not play out in a short period of time. But as you know, equity returns may not be linear, but if you look at a 3 year horizon, I'm sure it will beat the Nifty.
Okay, all right. So we're not sure of 1 year, but definitely on for the next 2-3 years. Senthil, would you agree with that?
Yes, I agree with that. And with respect to Asian Paints, in the last 1 year, their volume growth has lagged its peers, like by the Berger Paints or Kansai.
Absolutely.
Majorly because their focus is they are the market leaders in the southern markets and the western. And there was a lot of pain in the southern markets because there is sand shortage in the Chennai and Tamil Nadu markets.
Okay.
Because of these reasons, I think the volume growth of Asian Paints lagged its peers. But going forward, I think with easing of this demand side issues, I think volume growth should at least they should perform better than the FY18 numbers. And we all know that I think they are the best brands and the distribution in the industry itself. And one concern could be the rise in the raw material prices. And actually the company has raised its prices in the last quarter by around 1.5%, which is effective from March. But we have to see how they are going to make up for the increase in crude, which has happened in the last 1 week or 2 weeks.
All right.
So that's the only point you have to watch out for.
Okay. So that's the view on Asian Paints. And what about you, Vinit? I know that you are also constructive, but over a 1 year span, do you think it can be?
So I think it will be a challenge for Asian Paints. Number one is that valuations are rich, and if you grow volumes around single digit,
yes.
Okay, for a company like Asian Paints, a slowdown in one market should not really affect overall targets, but it has. And the competition is weaning away share. You also have headwinds from the crude price hike. So I think doing a 30 rupee EPS in FY20 would be a little bit of a stretch target, and they will have to really perform in FY19. So if the Q1 would be a gauge of whether the performance would continue. So keeping that in mind, I think I would give this stock a skip.
Okay, Senthil, you want to respond to that about the arguments made by Vinit right now?
Yes, that's slightly concerned, but valuation is 40 times FY20. Actually, all these consumer-focused companies are trading at 40, 50 times. So, majorly because the investors are more moving towards a defensive play, because the markets are pretty volatile,
right.
And because of that, the market itself preferring these kind of quality picks. So that was, if you look at the since year-to-date FY 2018 returns, the quality index has beaten the mid-cap and small-cap index returns. But we can't time the market, so that way I think I could prefer someone could invest in Asian Paints.
I think yes, yes.
If you take the case of Bosch, the moment the growth subsided, the valuations held on for some time.
Yes.
It underperforms, and then the stock dips.
Right.
Okay. So I would the trackable item would now be to see the Q1 results.
Sure.
If you are able to get through the sand shortages have kind of subsided, and it gains back traction in the south, then maybe you would look to warrant your reinvestment case.
Right.
Otherwise, I would give it this stock.
All right, fair enough. And Lancelot, I know that you do suggest keeping the stock for another horizon for another 2 or 3 years. But in terms of immediate concerns, well, these are some valid points here. And for someone who has a 1 year horizon, what would you advise them to do? Do you think it would be a better idea to wait for, well, maybe a dip and perhaps even wait for the first quarterly results before they actually move into the stock?
I think so too, because in the next 1 year, if you want to see what are the near-term price triggers, then obviously earnings in the first quarter results will be a significant, it will have a significant impact on the valuations.
Sure.
So if the earnings are strong and the volume growth is strong, despite all the problems that it's faced, then I think one would take a call and say like invest into it, because the remaining 3 quarters are bound to be a lot better. Even the ability of the company to pass on higher prices will depend on how the volume growth has been.
Absolutely, yes.
So I think it's crucial to look at the first quarter results. If things are taken in their stride, then one can say that, look, for the next 12 months it should perform much better. Otherwise, it's better to wait out and wait for prices to come off and then enter at a decline, because you have to, as you can't look at only a 1-year horizon to determine stocks. It's very difficult to do that. But if you are able to buy in at lows because the short-term performances are negative, you can accumulate good stocks in your portfolio, which will give you long-term outperformance.
Right. Okay. There you have it, guys. Well, in the long term, of course, no one's doubting the ability of Asian Paints, but in the short term, well, there is a lot of caution that has been raised by our experts. And with that, we move across and move on to the next one. The final stock that we are addressing today is Wipro. We've seen earnings from TCS and Infosys come in. We've addressed a lot of that which the management has spoken to us about with respect to the outlook for FY19. Wipro has been a little bit of a laggard in the top IT companies. The question then is, can it regain its lost glory in growth when it comes to FY19? So Lancelot, I'm going to start with you. Can it outperform what it has in the previous few years in FY19?
I think this question comes from the fact that the environment for IT companies has improved in the last couple of months.
Sure,
and a lot of uncertainty which was there regarding visas, etc., has now been become more clearer to the company's operations. But if you look at Wipro per se, it has actually come out with an earnings downgrade for this quarter, because one of its big clients has gone in for bankruptcy in India.
Right.
So I think apart from that, you are going to see a couple more of clients have pressures in terms of revenues coming in, as well as maybe recoverable. So that should put pressure on the company. Plus, I don't see that kind of traction as far as the re-engineering of their business into the digital space, being able to push them through, looking at various new platforms, which is what the focus has been with TCS.
Right.
So I think it's far better to stay with TCS than to look at buying a Wipro at this point.
Okay. Vinit, what's your call here? What's your view here?
I think that management really is struggling to get its business model right.
Right.
Over the last few years, we've seen several new hires and exits at top positions. So given that, and with the pickup happening and with concerns around clients, I think you can give this stock a skip. There are far better players out there. Even an Infosys would be much better than Wipro at this stage.
Okay.
But I think I would go with the mid-cap IT space, NIT Tech and Mastech.
All right.
And KPIT. They would be my preferred picks.
All right. Well, we will address the mid-cap space in just a bit, but Senthil, your initial thoughts on Wipro right now?
So generally on this large IT players like TCS or Infy or Wipro has been that their traditional business has been on a decline. Even in TCS, if you see Q4 results, even the digital business is growing at around 25-30%, but their traditional business has degrew by 3.5%.
Right.
Even though digital has been moving from 20 to 30% for these large players in the revenue share, I think putting growth numbers going forward, it's very tough for them. And we see Infosys guiding that the margins are not their focus. They are going to focus more on improving their business on a future focused strategy. So with respect to this, we remain neutral on the entire large cap pack, but we are quite positive on the mid cap players like Persistence or Take Solutions, who are focused on a niche play.
Right. Okay, fair enough. So there you have it. Well, there's a word of caution against Wipro, but then I'm going to argue that we are looking at a change in the entire sector. And if you don't, Senthil, then I'm going to address this one. If you don't compare Wipro to TCS and Infosys, because we all know that Wipro has its own problems, then the question I'm posing is that, do you think that the growth can come up considering the fact that there is a lot of change in the sector as a whole, and a lot of these the demand environment especially is turning from legacy businesses and turning that into digitization of businesses. Do you think that will make a difference for Wipro eventually, and do you think Wipro can then beat its current growth trajectory?
So currently for Wipro, I think around 25% comes from their digital revenues.
Right, which is almost the same as Infosys and TCS.
Yes.
24 and 25%.
Yes.
Yeah.
But if you look at the other verticals of like Wipro, if you go by the industry verticals, their energy and utilities business has not been doing well,
right,
because of various issues which we are seeing in the worldwide.
Yeah.
And another issue could be their BFSI. They are not strong in the BFSI segment, but we are seeing a strong turnaround in the BFSI segment itself. So I think if you want to bet on the large cap players, it could be TCS could be a better bet based on their strong fundamentals and stable management. While we see Infosys also good based on the valuations.
Okay. And
if you see Wipro and Infosys are trading around the same valuations, but Infi has a good strategy going forward with new management coming in. So I could prefer Infi to Wipro.
Okay, fair enough. Lancelot, we're going to have Wipro earnings, by anytime soon. The question is, what would you like to hear from the management that would make you think, you know what, maybe I can start taking a look at this particular counter?
Well, I would like to see how much business they have from their existing clients, what new order wins they have from in the existing business segment, because as Senthil was saying, that is crucial for considering the stability in their earnings growth. While you are seeing traction from the digital side of the business, you need to see that the existing base itself is not getting eroded. Otherwise, the fresh earnings that are there is barely compensating, and then you're not seeing any movement on the bottom line as well. So I would want to see how whether they have new wins, what's the traction as far as client retention is concerned, and obviously these cases about losing clients post the transactions, that's also a bit of a concern. So we want to see how that is addressed in this quarter.
Well, so plenty of concerns out there with respect to Wipro, and well, there are a lot of key watchables, and there's going to be a wait and watch on this one. But we've run out of time on this show, so well, that's a wrap. I'd like to thank all our experts for joining in and giving us their views, as well as joining us for the discussion. But don't go anywhere. We have Ask DQ coming up next, so stay tuned in the Bloomberg Quint and keep in view.